Hi, this is Raju here from Precise Trader. The topics we are going to cover today is, of course, taking full advantage of precise trading zones. Okay, basically what we do is, okay, we do take trades on specific price levels rather than market orders. And the theory behind or the theory we use is called price level principle or PLP. Okay, and of course, we have invented that and we have been using it and it is quite successful. So for those of you, I'm sure, you all have been doing trading according to, using a technical analysis. I'm sure you do have a specific strategy. But what I would suggest is, it's best to have a specific strategy and have it fine tuned, until you start making money from it. Then, you go on to the next strategy. That's how you develop your game plan. And also, do take note of this disclosure. Okay, whatever we are going to discuss, this is going to be purely education. And also, please stick to the rules. Meaning, please take note of your entry, exit, and your stop loss uh, levels. Okay, and the crosses mainly we focus all about 36 crosses, and these are the crosses mainly which we trade and we focus. So if you have any doubts or any questions pertaining to any one of these crosses, okay, feel free to ask or we can do a discussion. We can have a group discussion and at the same time we can learn as a group. So please also specify the time frame you are looking to discuss, because sometimes what happens is in fact, most traders, they go in the wrong direction or wrong side of the market pertaining to, because they're looking at a different time frame. What do I mean by that? Meaning they do the analysis in one time frame, and once the market is in their favor or the market goes against them, then they do or they plan to hold their trades in another time frame, which is not a good idea. So it's best for you to focus on a specific time frame, see how far the price is going to go on that specific time frame. Then, you take your trades, whether, your risk versus reward justifies, so on, so forth. So that's how that's one of the strategies which you can use, in order for you to be a successful trader. And, again, the crosses, we focus mainly all these crosses, USD, Euro, Pound, Yen, Swiss franc, Aussie, Canadian, New Zealand, and Singapore dollar, right? Any one of these crosses against each other. And also for some of you, I think they do want to know how do we get these numbers or how is this zones been generated, right? So we use this tools. We are very a firm believer of Fibonacci numbers, Andrews Pitchfork, moving average, trend channels, and Gann numbers. And do take note that most technical analysts or most technical traders, they use either one of these tools in order for them to guide them along to take their trading decisions. So as a result, when you use these numbers, which has already been generated, which would be much more, that means that the homework has already been done for you, so that, it will be much more easier for you to take your trading decisions when the market moves. And we also give trading tips every day, every session. And because one of the ways we are here to learn as a group, so I think, it would be best for us to have something in mind, so at least we don't make the same mistakes again. So the trading tips which I'm discussed today is, stay away from the market if you are not sure, and don't be an addict. See, most traders, especially if they are coming new to this business, somehow or rather they become addict. Addict in the sense, like somehow or rather they get carried away because they feel that it's easy money, meaning in the sense sometimes when they take the trade, it's just a click of a button, meaning in the sense just click of a mouse, then, whether your account grows or your account depreciates, meaning in the sense, either it goes in a loss. But most people, especially when they are losing money, the emotions would control them. And as a result, they more or less, they become an addict, meaning they don't want, they want to recover their losses fast, as quickly as they can, or even sometimes they're making money. They do want to trade more and more to become rich very soon, which is not a good idea, because I have come across many people, they have worked or they did their trades and they made money for almost a year or 2 years or so, and within a week or within a month, they erode all their profits and become back to square one. So what I would suggest is it's best for you to have a game plan, meaning in the sense you should be knowing when to enter, when to stay away, when to exit, and of course where to put your stop losses. This is what makes a successful trader. So in other words, if you're not sure, because sometimes when you are taking a trade, if you are not sure, meaning sometimes your mind will say, it's going to go up, and your emotions will say, it's like it's going to go down. When both doesn't go along each other, then it's best for you to not to take any trades, especially putting in real money. It's best maybe you can put a demo account, or just take a paper trade, meaning in the sense just see where does the market go, and at least you can learn from that and come to a conclusion or come to a game plan or strategy. So, and try not to be an addict, because this kills. When you be an addict, uh, chances are you are going to be kicked out of the business very soon. Whenever you become addict. Let's get back for today's session. In fact, the market has been very quiet. If you see this, the net change from yesterday's New York closes has been pretty flat, meaning most of the crosses are flat. So here you see the zero is about plus minus 5 pips. Pound has been about minus 17. Swiss is flat. Yen is about 20 pips plus. Canadian is about minus 10 pips. Aussie, so on and so forth. So in this kind of scenario, see, what I would suggest is it's best for you to wait until the breakout happens. See, what do I mean by breakout? See, it's best for you to trade when the price breaks above or below the support zone 1 or resistance zone 1. That is, probably what I can do is I can just quickly run through this one example to show you what you should be doing on this particular market, so that when you use the report or when you use this zone, this would tell you, or this will guide you along to take your trading decision. Let me pull you this one report, maybe sample report for you to see, and so that you can use it to. Just give me a minute. Okay, this is a report. This is a FX4 report, which is today's report, which we have generated for this session. So basically, what we do is I'll just quickly run through this example, and as we go on, of course, if some trading opportunities comes by, we can take a trade. Otherwise, we can look or discuss on viable trades. So let me look at this or show you or discuss on this example on this New Zealand USD. This New Zealand USD, the previous close is 7065, which means the US close. And we usually use this levels as a benchmark in trading, taking our trading decisions. Meaning, if the price is trading above this close, then we know that the bulls are in control, and when it trades below, then it trades the bears are in control. So when that happens, at least when you take your trading decisions, meaning when you go for a long or buy, at least you know that whether are you with the trend or with the or against the trend. So at least you know how to get yourself prepared. So let's look at excuse me, this hourly trend. Okay, basically you can use any one of this three time frame trend, and you can follow this accordingly, whatever time frame which you are interested, or whichever time frame you are following. The hourly, it tells you, is sideways up while 70 figure holds. So basically what it means is, as long as the price doesn't go below 70, the price should be going up. That's what it means. So overall is the lower or the nearer to closer to this level, that's the least risk with the most rewardable trade. So you should be trading near to this level, in order to make the least risk with the most profit. So right now it's trading about 70.66, which is precisely near that previous close. So as a result, you should know, even if you want to take trade now, you know that at least that 60 to 65 pips plus, if let's say you take a trade near that 70, you put another number, but easily about 80 to 100 pips risk is involved if let's say you take the trade now, that's how you should be interpreting this. And as far as this daily is concerned, it says turning down while 72.05 falls. So in other words, these two time frames or the two different trends are telling you a two different picture. That means that hourly is going to go up. That means your immediate trend is going to go up, and the bigger time frame, even though if it goes up, it should come down eventually or towards the end of the day. That's what this is telling you, because this is going to be a turning down while or provided that 72.05 holds. And as far as the weekly is concerned, it says sideways while 73.60 holds, which means that the weekly has been choppy. That means 1 week has been up, another week has been down, so it's not giving us a clear direction. But overall, it is telling you a selling picture or selling pressure should exist, right? So these are the two higher time frames are telling you that the price should eventually come down. The lower time frame is telling you it should go up in the immediate future. So after that, we have this economic calendar, which is only this important data is mentioned here. So I suggest you print out what are the important data out for the day and keep it on a desk, so at least you can follow up, because sometimes when you take your trade, especially if you are a scalper, if you use a 30-35 pip stop loss, chances are, when you take a trade during the data announcement, chances are you may be stopped out due to the wild swing. Unless if you are a risk taker, meaning, if your stop loss is about 50 to 70 pips, then you can take a trade. After that, let's see this New Zealand USD. This is where we guide along, how do you interpret or how do you take your trades based on today's market condition. This market summary is basically history, what has happened the previous day based on the report. It says closed at 70.65, which was below the open and was within the prior day's trading range. And the high was 15 pips from Precise Traders Resistance Zone 1, and the low was 5 pips from Precise Traders Support Target 2. Another thing I want to emphasize or highlight is, please take note, whatever the levels we mentioned here, use plus minus 5 pips for your because as a variance, because different brokerage firm will charge a different spread. So it's best to use about plus minus 5 pips for the majors and about 8 to 10 pips for the crosses, right? And as far as the trend is concerned, it says the hourly oscillators are turning bullish and the price is within the moving average. So whenever the price is within the moving average, you should know that the price is expected to be choppy. And of course, since it's turning bullish, so you should be looking for a buying opportunity, right? So the bears have to be cautious, and the hourly trend is sideways up while 70 figure holds, and daily trend is turning down while 70.05 holds. So expect the price to be choppy until the breakout happens. The reason being is because the price is within the moving average, so you do have a resistance or a pressure, happening, whenever, because there will be a big war happening between the bulls and bears. So as a result, you see a choppy session until the breakout of that range, right? And as far as this daily is concerned, these are the levels we use as a daily boundaries for the day, meaning these are the levels you can expect the maximum high or low for the day to happen within these levels. That means 71.20, 71.65, or even 72 in the event the price goes up. In the event the price goes down, then these are the maximum low you can expect for the day. Sometimes these levels can be a trading opportunity as well. That means when the price reaches that level, you can go for a quick buy or sell. When I say quick buy or sell, we are looking at about the region of about 35 pips, 35 to 50 pips, not more than that, right? So, and as far as the patterns are concerned, these are the two sections where you need to pay attention in order to take your trading decision. And the pattern says the daily trend plunged below the prior day's low, but the bears gave up more than half of their gains towards their close. So basically it tells you that the price dropped, and towards the closing, the bulls came in, but still, the bears were gaining. So this like the bears gave up more than half of their gains. That means, they gave up towards the closing session. And the hourly trend has been in a range trading with the potential to turn up soon. And 70, 45, and 70 figure are the critical levels to watch to maintain the bullish outlook. So in other words, excuse me, to support our statement or to support our analysis, the price should not trade below 70.45 or even 70 figure. So if it goes below these two levels, then our analysis or our assumption is wrong. So you have to be extra careful when you see this, statement, and you have to use this as a guideline to take your trading decisions accordingly. And on the 5 minute is along the horizontal channel, and the patterns are suggesting the price may creep higher provided 70, 45, and 70 figure holds. So again, we are telling you that in order to support our statement, the price shouldn't trade below this level. So overall is we are giving you a guideline. So it is best for you to use this guideline to take your trading decisions accordingly. And the opening price principles are mixed, so cautious approach is needed until the break. So in other words, the market has been a range trading has been very quiet. So as a result, we have not got any signals from the market. So we have to be cautious until the breakout happens. What do I mean by the breakout? It is, as I told you, it can be either the support zone 1 or resistance zone 1. As I go on, I'll guide you along. And as far as bulls are concerned, these are the levels you can use to take your profit, book your profit if you have shorted, or if you're planning to take your entry or look to buy. So the bulls is 70 figure, 69.60 or even 69.25. These are the levels you can pay attention to. If you're bearish, then use 70.90, 71.30 or even 72 figure. So this is one of the tools we use to get these figures. So as a result, if you see the price hitting these levels and turning around, then it may be a viable trade or one of the trade to consider for you to take your entries. And today's strategies, conservative traders, we usually say, we generate this once we get a clear signal. It says sideline or sickly trade at precise traders report levels. Aggressive traders, you have to trade at the bears and bulls levels only. In other words, if I reaches 70, I go for a long. Then if it reaches 70, 90 or 71, 30 or even 72, any one of these three levels, I would like to go for a short. That's what it meant if you based on this level. So overall is by looking at this report, overall is I'm looking to buy, and that's what I should interpret. And when you look at, of course, when you buy, you should know that the upside is limited because as I told you, that the daily trend and the weekly trend are telling you that it's going to turn down. So you should know that the upside is capped, and your immediate trading opportunity should be a buying opportunity. If you want, you can take this trade. Otherwise, what you can do is you can look for a shorting opportunity once the price goes nearer to the higher levels. Okay, what are the levels we would discuss now? So you begin the day by looking at this levels, meaning we have a resistance, we have 12 zones on the resistance and we have support 12 zones, right? So basically we use this levels for entry, exit and stop loss. So this is what we use our levels. So when it reaches, when the price is trading within the resistance zone 1 and support zone 1, like right now the market is trading at 70.70, alright? So it's within the zone. We call it a no man's zone. So if you are a conservative trader, then what I would suggest is best for you to stay sidelined until the break happens. What do I mean by break? That means I only take a trade, look to buy or sell, because right now is you should know that you should be looking for a buying opportunity. Like as I told you, the hourly trend is up, so we look for a buying opportunity. So you can get a two trading opportunities based on let me pull the screen. Yeah, you get a two excuse me, you get a two trading opportunities based on the report, and you can take a trade based on this report. What are the levels you look to take your trade? The first opportunity would be a second time break of 1790. Okay, I repeat, a second time break of 1790. I would like to go for a long. This would be my game plan one. So to fulfill that condition, I should see, because this is I'm buying or long at the resistance one. So whenever I do that, when I'm buying at a higher price, that means resistance one. The condition to fulfill to do that is you have to ensure or check that the low for the day is within 70-40 or even 70-25. So if you see the low for the day is within 70-40, that means higher than 70-40 or 70-25, then I go for a long on the second time break of 1790. So if I'm long or buy at 1790 or 70 plus minus 5 pips, right? So if I'm buying at 1790, then where do I book my profit? So we have 7120, which is our immediate resistance. We have a resistance. These are the three levels where you can book your profit, which is 7120. I have a 7150 and I have a 7250. These are the three levels whereby you can use to book your profit. And we have another three levels, which is 7170. We call it as a U-turn zone or resistance zone 5. Okay, we have, in other words, 7120, 7150, 7170 and 7250. These are the four levels. Plus, I have the high for the day, which is again the 7120 level, which coincides with the same level, right? So it doesn't make much difference. And we have the bear levels, which is also at 7120 30 level. So in other words, I have a strong resistance at 7120 30 level, right? So once it clears, then I would be looking to sell. So what you can do is I can go for a second time break of 70-90 of about 30-35 pips profit target. Then again, your your stop loss would be about 30-35 pips or the immediate low on the 1 minute chart. I'll show you the chart later to see how you can trade this based on this instrument, right? Based on the report, right? So this would be my game plan A. The game plan B would be I would be looking to long, meaning near that 70-40, which is our support zone 1. So if the second time touches of the 70-40 and holds and price starts to move up, that means I would look to a buy. So this is again, if I'm going to buy at 70, let's assume at 70-50, as I told you earlier on, okay, if you're a conservative trader, when the price is trading within this no man's zone area, you can stay sideline. Okay, that would be because the price moves, the swing can be pretty noisy, or the price can be pretty noisy when the price moves within this zone. So if let's say I assume I buy at 70-50, okay, that means the second time touches this level and holds. Again, I should exit before the price clears this barrier, which is 70-90. That means I have a 40 pips price target, and again you can use this about 30-35 pips stop loss and about 40-45, which again it gives you a risk reward ratio of 1:1. See, this is what happens whenever the price is moving in a consolidation phase or is caught in a no man's zone. So now let's look at our chart and see how can we interpret or how can we play this market. See, basically we all our trading decisions we use 1 minute and 5 minute, not higher than that. So if you recall, let me highlight this lines. So 70-90, right, and 70-40. So these are our our zone levels. So right now this market is caught within this the no man's zone area. So as a result, the price is expected to be choppy. Choppy in the sense it's going to be in a bit choppy mode, meaning the sense is going to be a bit noisy, right? So in other words, as I told you, two game plan. See, the first time, in fact, the market, if you notice, 70-40, it tested the previous US session close. So if you feel the price is coming back at 70-40, and if you see the price holding and starts to move up, then you can long at about 70-50 and exit before the price clears this barrier, which is 70-90, which you get about 40 pips move. That's our game plan 2. The game plan 1 is, which is I said, first time when the price reaches 70-90, the price should struggle, meaning in the sense the price should consolidate, and if it has a minor pullback, and the second time if it breaks again, that's where you should be looking to long, and again this would be about 40 pips move. So these are the two trading opportunities which I can talk about and discuss with you right now at this moment. And the rest of the market are still very quiet. As I told you, we have to trade because it is best for you to trade when the market breaks out of the range rather than you take trades within the range, because sometimes when you take trades, of course you have to be very fast, especially when you trade within the range, right? So any questions pertaining to any markets you want to discuss, feel free to ask questions. We can discuss as a group, and please specify the time frame which you are looking forward to, right? While we are waiting for the questions to be asked, maybe let's look at Euro USD and see how can we trade this instrument or on this instrument, right? So if you look at Euro USD, so this in fact the price has dropped for quite some time, meaning in the sense it dropped from 138 to 134.70, which is about 350 pips. So right now this is what is happening here is the market looks like it has already more or less bottom in the sense the hourly has already looks like it's going to turn around. So to support our statement, let me give you this zones levels. So this our zone 1's levels are 135.95 resistance zone 1, and our support zone 1 is at 135.25. So right now what is happening is the price is again, this is caught within the no man's zone. So to support our statement, meaning if we are saying that the price looks like it may have bottomed, to support our statement, the price should not trade below 134.95 and 134.60. That means, in other words, these are the two levels we would like to pay attention to see that in order for the price to make higher highs and higher lows. So overall is these two levels should be having in mind to support our statement that the price is going to go higher. That means the price shouldn't be trading below these two levels. So now we look to look for a buying opportunity on this particular instrument. So what we do is again is the same similar strategy which we want to apply. Two strategies. We like to buy or long near 135.25, and of course if it comes and touches 135.25 and starts to move up, then you can go for a long or buy the break of 135.70-75. So once it breaks this level, we'd like to long, but we have to wait to see whether the price clears 135.95. Then we can be pretty sure that the price is going to make higher highs and higher lows. Till then, the price would struggle or consolidate. That means, like once it breaks this 135.70, then probably that 135.95, it should come and it should have a minor pullback. So if you feel that if you want to be a conservative trading side, or if you want to be on the safer side, then what I would suggest is you go long on the second time break of 135.95. What do I mean by second time break? That means first time when the price reaches this level, usually you are bound to see some consolidation happening around this level, and you should have some pullback. So when the pullback happens, then you should know that okay, what we are expecting should happen. And when the price starts to break the second time with a minor valley happening or minor pullback happening, then we can say that that would be a viable trade and we can go long. So of course, if you are long at 135.95, we have an immediate resistance which is 136.20 and 136.45. So that is again for you to decide whether that risk versus reward is it justifiable for you to take a trade, or you want to let go of the trade and wait for the next viable trade or next trading opportunity. So this is for this instrument. Excuse me. Please feel free to ask or discuss on any instrument, so that we can please try to make this session as interactive as possible, because I think the more we ask questions, I think the more we learn as a group. Okay, the question is, what are the prices for your reports on monthly basis? See, basically we give a trial for 1 week, so you can come to our website to get a trial. Then after that, usually I think it's about 100 US per month, right? So you can see, and I think it's best you come and try, before you try and validate, before you start really looking at the price and validating the report. So it's best for you to come and try and see and convince yourself to see how good is the report or how bad is the report, then you can decide whether you want to subscribe. Any other questions or any markets you want to discuss? Feel free to ask, because I think, let's see, while we are waiting, let's see, we'll discuss one more instrument or one more cross. Let's say we look at, okay, the question is Euro Yen, right? Let's say we look at Euro Yen. See, this is, again, if you look at this Euro Yen, it's a similar picture as the Euro earlier on I said. Okay, the market has dropped, and right now it is having some pullback. So this is still too early for us to conclude that the market has reversed. So what we should be doing is, for this particular instrument, of course, we are looking, the market may have turned. So to support our statement, the price should not trade below, let me give you the levels, 121.70, okay, 121.70 and 121.25. These are the two levels. The price should not go below this in order to support our view, meaning in the sense or bullish view, means we are looking for a buying opportunity. So where do we buy? Again, we can look at break of 12250, 12250 level, right? This can be this is our resistance zone 1, and our support zone 1 is 12190, right? So for this you use a plus minus 10 pips on this crosses. So what we will be doing is either you can go for a long at near 1 to 2 figure to have a quick about 40-50 pips profit target, or break that 1 to 260, then you can go for a long. So that would be another possible trade. Again, we have to take note that the upside may be limited for some pullback, so you have to exit about 40-50 pips stop loss. I mean 40-50 pip price target, because it is due for some pullback. So you have to take note on these two levels. Okay, the next question is overall for this week, Euro USD will be up or down. See, what has happened, or what has happened to Euro USD is it has been in a range trading for almost like a couple of weeks. Okay, let me show you the chart. Okay, this is the daily chart which we are looking at, and it has been in a range trading for almost like since 19th February, right? So this is on the daily chart. If you look on the weekly chart, again, it is also has been in a consolidating mode, right? So overall is to answer your question, whether it is going to be up or down for this week, what I feel is, okay, it should still be in a range modeling. This is a 2-hour chart which we are looking at, and right now it should start to move up, but again, till it breaks out of that range or that trading range, we can't be pretty sure or pretty exact, or pretty precise that saying that it has already started moving up. So overall is, it is best for you to trade, because this kind of market, you should understand or accept the fact that you should always trade the market. So I know you want to know the answer, but if the market is not giving you a clear clue or clear answer, then I think it is best for you to stay or wait for clearer signals to come. That's the best thing to do. So right now, what we are expecting is it is going to go up, but I would not be able to tell you that whether this is going to be a genuine break or it is going to be a false break. Again, that is, you have to wait for the market to give you the reply. Okay, the Canadian, US Canadian dollars. Please, when you ask questions, like as I told you, please try to mention the time, because if you mention the time, then it will be much more clearer in our analysis, and your when you trade the market, it will be much more easier to trade. So this Canadian dollars, what we feel is, okay, right now let's go on from a daily chart. Looks like the market is going to turn, right? Again, it may have bottomed. Okay, that is still too soon for us to conclude that it has already bottomed. But what we feel on this particular instrument is it is going to have some pullback, right? And the pullback should be limited to, let me give you the the levels. Should be limited to 10125 and 100, I think about 65-70 level. So in other words, when this market is going to have a pullback, you should be expecting the price to bottom within these two levels. And if you feel that this market has turned from these two levels, then you can be pretty sure that the market is going to turn around. And of course, the high which has happened yesterday has to give way. Then we can be very sure that this market has already reversed or started to move up. So we can look to go long. So in other words, for the next 1-2 days, we should be expecting this market to come down and bottom and start to reverse up. That's what we feel that's going to happen on this instrument. But that is to support our statement that this low should not be seen or should not give way, right? So that is the my view on this Canadian dollar. Pound USD. Excuse me. This pound USD, let's go on a 2 hour, I mean daily chart. The daily chart looks like it has also been in a in a range trading, right? It is not giving us any clear signal. And let's say on this hourly chart, this hourly chart, what has happened is it may have bottomed. So right now, I think the price is expected to go higher and higher. So again, the price should clear this 153.85 in order for the price to make higher. But overall, I think buying bias is expected, meaning it's best for you to go long because this is what is expected on this particular market. The levels I can suggest on this particular instrument is 151.35 is where our resistance zone 1, and 150.65 is our support zone 1. So again, if you ask me on this, what is going to happen on this particular instrument is once it breaks 151.35, the next immediate barrier would be 151.70.75. So the price should not go beyond 152.25 or even 152.50. Then it should have a pullback, meaning in the sense it should have a fall, right? So if you are planning to long, you can long at 151.35 or near that 150.65. But again, you should know that once you're long near 151.35, your upside is going to be limited. That means we have only about 40, maximum about 80 pips, 40 to 80 pips move that is going to happen here. Then it is going to have a correction, meaning in the sense it is going to have some pullback. So that is our view on this pound USD. I think the Canadian dollars, I think early on, the next question we have more or less we have discussed. So it's 2 hours and 4 hours. I think it doesn't make much difference because the patterns looks similar, right? So it doesn't matter, whether you're looking at a 2 hour or 4 hour chart. The same thing goes if you're looking at a 1 hour, 2 hour chart. I think there shouldn't be much difference. So I think it's best to use 2 hour chart than 1 hour chart because what we feel is 1 hour chart is pretty noisy and choppy. So this is our view on that. But that is again, if you're comfortable with that, I think you can go ahead and use that time frame. Okay. Any other questions before we call this day off? Okay. With that, I think we would like to conclude this session, and I would like to take this opportunity to thank FX Street for organizing this event, and I would also like to thank you for coming this event. Please try to be, because see, I think the more you ask questions or discuss, I think the more we learn as a group. So please try to be as interactive as possible the next time when you come in, because you might understand maybe sometimes I know a lot of people, they try to want to take trades, but you must understand that you have to trade the market and not your expectations. So it is best for you to be, when you trade the market, that means when the market is being nice to you, then you can trade the trade and hold the market. But when the market is not giving you any clues or any directions, I think that's the time you need to stay put and have a more disciplined trading rules, because the moment you take trades and when it goes against you, and especially when the price is very choppy, chances are you may be stopped out unnecessarily, right? So this is my humble request, and of course I leave it to you to decide. I'm sure you have a strategy which you follow, so it's best for you to stick to the strategy and fine tune and and do your trading day to day basis. Okay. Now with that, I think I'll conclude the session. Thank you very much and goodbye.